We all have wishes, both large and small ones. Some are important, some are essential, while others are for pure pleasure. The list is long, and money is nearly always limited. We can plan small investments on our way to work, while we plan others on our way through life. Goals are always one step closer when they're well-defined and their costs evaluated. They can be realized in various ways: by gaining additional income, reducing spending, borrowing money, or cashing in assets. A simple calculation can be used to verify whether our financial plans are feasible and how long it will take to realize our financial goals. It's very easy for spending to get out of control. We spend cash on credit cards and get overdrafts and have insufficient funds for realizing important goals. If we're prepared to think about what is less important to us or not needed at all, we can easily eliminate certain costs. Before you pay others, save some money for yourself. After receiving your salary, the first payment you make can be into a savings fund for your children's education or for your old age. The fundamental principle of managing spending is to spend less than you earn. To more easily weather unexpected tough times we sometimes encounter in life, it makes sense to form a financial safety net. This safety fund can be used to pay for essential costs in case of an unexpected reduction or even loss of regular income. The recommended amount that should be put away as your safety fund represents 12 times 70% of your monthly income. Some life goals require us to take out a loan or simply borrow money. However, repaying such loans is usually more difficult than borrowing. Every problem has a solution, even debt. The first step is to prepare a systematic plan. The recommended level of maximum debt depends on your age and can be determined using a simple calculation. Debt can be reduced by limiting weekly spending, reviewing our total debt, and asking the bank to amend the monthly repayment amount. We can also sell assets we don't necessarily need, or as a last resort, file for bankruptcy. Life is full of unexpected situations, although we don't usually give them much thought. If we are insured, we can feel safe. We can insure our life, health, and even assets. Appropriate insurance can help ensure the financial and social security of our loved ones. We should also make sure that the total insurance cover is appropriate, as it should be no less than our total outstanding debt. Investment life insurance can help us further appreciate our funds. Each investment decision begins with a question: what are our aims, goals, time frames, and risk? Investments in securities should always be viewed as long-term investments for 5 or even 10 years if possible. Although you can place all your eggs in one basket, this is not safe. Investment diversification mitigates, while our own high expectations increase the risk. The higher the expected return on investment, the higher the risk we are prepared to take. Knowing ourselves well and looking at things objectively can significantly reduce the risk. Many of us would like to retain our current standard of living after retirement. This means we need to start saving for old age immediately. The later we start, the higher the percentage of income we will need to put away every month. The recommended amount we should have saved by the time we retire amounts to 6 years' worth of income. NLB. I know why.